Good morning, everybody. I'm making this video lesson around 9:30 p.m. over here in Maui. And as I make this video lesson, NASDAQ futures are off almost 1%. Russell 2000 futures are off over 0.5%, getting close to 0.75% on the downside. Looks to be an ugly open. Hopefully, that'll be great for our fills. Hopefully, none of my long positions gap down and open below where my stops are. And hopefully this morning lows hold and we rally throughout the rest of the day. But either way, if we continue with the selling, I will not be surprised. The NASDAQ and NASDAQ 100 looks very susceptible. A lot of tech stocks that I'm looking at look like they are topping out, like let's say Shop, MU. I saw somebody mention Adobe. You can see what Apple looks like, Netflix, AAOI, my personal holdings, COHR. So, I mean, a lot of these stocks look like they're about to roll over. So keep all of that in mind. We're in summertime. This is a seasonally very weak period of the year we're heading into, especially July. It's not a happy month recently for stocks. So we'll see how that plays out. But for Thursday, I have 3 new long positions, 1 quality, 2 speculative. I have 2 speculative ads. PED and ARGS, they're self-explanatory. They each have 1 stop at their recent lows. The profit targets are their recent highs, like in PED, it's going to be, these May highs, this April high, the 200-day moving average. ARGS, we're looking at this May high and then this April high and then these February, March highs and the 200-day moving average. So I don't want to really go into those. I want to focus on the new long positions. HOME, this is the only quality long position for Thursday. Beautiful chart, super short term, very nice chart, intermediate to longer term, but super short term, it's also very extended. If you look at this previous measured move, any of them, if you look at this March to May move or November to May move, well, then this consolidation right here isn't even close to being symmetrical to this or even this. So the odds of it blasting higher here is low. However, if it does, this stock will probably run to 50 before we have a chance to really get any kind of real position. So I want to go ahead and get long now at HOME, especially with all this max green bop and above average volume after such a small pullback following this powerful move here on June the 7th. So HOME first showed up in my Cancelim quality scan. It sports 91 composite, 71 EPS, 97 relative strength, B accumulation distribution, Bay group relative strength, and then B, profit margin, return on equity, sales combination. EPS is up 39% in the most recent quarter. Sales are up 23% in the most recent quarter, so that's good growth. Love the chart. It's in my Cancelim scan. It was then confirmed in my price volume BOP surge scan, and then confirmed in my max green BOP for 5-day scan. So you got 2 confirmations to the Cancelim quality stock. The problem is, like I said, symmetry is not good, which means obviously it's extended not only from its 20, but it's 10, it's 50, and 200-day moving average. So Cancelim, 2%. Price volume BOP and the BOP scan, another 2%, 4% total long position. We got to half it since it's extended, 2% only. And since it's extended, can't use the high today, got to use the close. So 22.33 is my limit. 2% of my account capital, not 4. My first cut loss is 21.21, which means if I'm wrong, I will be out of half of the position extremely quickly. And then my final stop, yes indeed, I'm using it all the way back here to 1850. Keep in mind, this gives me the chance that if the stock doesn't blast higher following that arrow that you're looking at right here, and let's say it trades like this and then starts to zoom higher, I can't show that on the chart here because I'm running out of space. But if it consolidates here sideways, and let's say that I'm keep moving my arrow up, back and fills, and then boom, starts to move higher, I'll still at least have half my position. But if HOME moves below 21.21, and it either does it on heavier above average volume or does it while losing max green BOP, I'll start cutting. So if it loses max green BOP and heavy volume, whatever the new low is, that'll be the final loss. Let's say it pulls back on lower volume, then I'll just be raising. Like let's say I have 100 shares, I'm out 50 here and I have 50 remaining. Well, then I'll split one up from 25, 25. And then if that 25 fails, then I have 25 left, then maybe 13 and 12. And then after that, maybe 6 and 6. And we'll do that until 1850 fails on its own merit. So that's the quality long signal. The 2 speculative trades, MYSZ, very nice pattern. Want to get kind of up close on it. As you can see, following this little pullback with volume below average, we get a heavier volume bounce. Candle over candle price bar, the heavier volume, max green BOP right here. It was in my green bop for 20-day scan, the green bop here, and my max green bop for 5-day scan, which made it an automatic new long position. Want to get long, limit order 144. First cut loss level, 130, then 113, and yes, indeed, I'll use 99. Now, it takes out 130, 113, 99, or it even takes out 134 on heavier volume, and let's say it loses max green bop, or it just loses it on lower volume, but loses max green bop. Then once again, just like HME, I'm raising my stops, no questions asked. But MYSE, pretty nice. First target right here, I think that's what, 219. Then what, 269 I think is here. Then we got like 329, then 383. So those are some initial targets. Also the 200-day moving average here. Then there's DRWI. DRWI came in my max green bop for 5-day scan. This isn't necessarily the greatest, I guess, swing trade idea because the risk is so little. If this thing just pulls back a little bit, I could be knocked out of it, which is why I want to split my stops up despite the final one being so far away. But DRWI, my max green bop for 5-day scan, it's pulling back here on below average volume. It's starting to do that hook, curl, fish hook pattern, whatever you want to call it. U-shaped rounding action, whatever you want to call it, but it's starting to get that. If you want an example of a stock that did that recently that I went long that didn't really have the volume signal, TCCO, remember back here, the hook, rounding, U, curling, fish hook action, boom, up 59%. Hopefully DRWI can do the same thing. If not, that's why I have my stops. But I want to get long, limit order 86. First cut loss level, moves below 82, I'm out of half. And then, yes, indeed, I will use 64 as my final cut loss level. But if it breaks this low, like I said, heavier volume, even lighter volume, it loses max green bop. No matter what, if it breaks this low, the next low, I'm going to be moving at least half my stops up to that. It doesn't matter if it pulls back on lighter trade and max green bop. I'll still probably end up raising stops. But lighter trade, max green bop, while keeping a tight intraday price action, maybe not. But if it's a wild intraday price action, even if it's light volume, even if it sells max green bop on DRWI, since the final stop will be so far away, I'll probably start raising it. But the market looks ugly right now after hours before I head to bed. But DRWI, hopefully it gives me a good entry. And if it does fail, it'll lessen my risk. Same thing with MYSZ. Same thing with HOME. Either way, the first stop level on all three stocks are very close by. I won't risk much if I'm wrong, and I'll be well out of more of the position before the final stops ever come into play. All right, good luck on Thursday, everyone. We're going to need it, it looks like.